The feared and dreaded worldwide trade war that everyone was worried about has had some of the pressure come off of it. People are seeing that likely things won't lead to that. Now, it does seem likely that in the near future, central banks will be injecting liquidity into markets, and that is very good for crypto. But the markets haven't rebounded yet. Let's take a look at what's going on with prices and see if prices give us any indications of what people may know about. Are things looking rosier yet, or is it still more punishment? Welcome to the Crypto Rain channel and our family. Now, if you, like me, came into crypto because you realize there is massive potential here for life-changing gains, but over a greater 4 to 8 year period, you're looking for discussion on becoming a solid, unshakable, savage crypto investor, like a Navy SEAL of crypto investing, you're in exactly the right place. Now, I was once new to the crypto space 8 years ago, and I didn't know at that time that those with YouTube channels grow a huge YouTube channel by talking about things that were already very high and being optimistic for why they'd go higher. So I didn't realize that first year that incentives were all wrong for most of who I was watching on YouTube. I was hungry for analysis on cryptos that were underpriced and undervalued, and I didn't find that. So in 2020, I created that. Now, we discuss crypto as investment here, discuss the most important things like investment cycles, projects, and pros and cons of those projects, the risks of those projects, the guesses at upside if they come together well. Together, we created that. Now, when I started this channel, I shared the problem with the YouTube algorithm and asked if you would join me to help get the channel big enough. We could then have guests on from the top crypto projects that we felt were undervalued. And we accomplished that. Now, many of you are here after dollar cost averaging through the bear market and watching and waiting for this 2025 bull market. And it is going to be huge, even though it may not feel like it right now. If you're looking for deeper discussions, join our private Patreon group that allows you access to our Rainmaker private Discord. Private Discord is where the best discussion and best info is, and there are other benefits too, but you'll have to join us to find out. Do note, I'm not a financial advisor. I'm a crypto investor myself. Paul invests in many different markets. None of this be taken as financial advice. Well, let's welcome Paul to the channel. Paul, thank you so much for joining us.
It's a pleasure as always, and it's nice to be looking at the markets when things have calmed down a little bit. You feel like you can walk away from your screen and actually not come back and find that everything's moved 5% in one or other direction. But it's been a bit of a wild ride, and I think the market needs to calm down a little bit now, which it's doing, which is a good thing.
Yeah, there were concerns of massive trade wars, and it still could go that way, but it's looking like maybe the clouds, I guess you could see some possible ends to the storm clouds now, and it's not looking as bad as it would have been, 10 days ago, a week ago. Well, is that what you're seeing up there in London?
Well, what I'm saying is basically nothing has really changed from the core strategy. This was a kind of a left field thing that we knew was coming, but it was just bigger and it shocked the market in the very short term. And what happens when the market wants to go higher, it will use these as opportunities to buy. And that's kind of what's happened. Now, I'm not saying that it's completely out of the woods, because what you've done is shake confidence. And what the pressure on Trump was really when the bond market started to move up. Look, we talked about his style of negotiation, and there's a lot that he's done that I really feel is fantastic. I like the woke stuff, and Doge, I think, was an interesting way of approaching perhaps years of government inefficiency, I suppose is what it's for. But all that stuff about, is there any incentive when you're in a line to actually do something, to get a form signed or whatever it might be, for those people there to actually do a really good job and to the best of their ability, when they know they're being paid by the government as opposed to a private corporation where you can take your business elsewhere. Those sorts of things I really like. And I thought Trump as a businessman would perhaps be really good for the broader business. And then when he's come in, it's kind of a double-edged sword with Trump, because you've got, yeah, he's crypto positive, but also he's sort of tainted himself a little bit with this Trump coin, which I don't think is gonna sit very well. And then, yeah, he's great at negotiating, and he might be feared in the sense that he's kind of random in what he does. But these trade wars are, it's kind of knocked a lot of confidence in the US, and China's just going to go, right, we're going to go around you, we're going to start to do things, we're going to divert stuff away from you, if that's how you're going to play it. So I think in the end, the way he plays is hardball, and then anything that comes out of it as a salesman, he will make out that it's what he wanted and what he was trying to do anyway. He's blessed with an underlying solid market that will probably recover and will go higher. Whether that will happen shortly or whether it will happen after consolidation, it's definitely not the dollar, but we were looking for that anyway. And that is a positive thing for US stocks and for crypto risk on and all that sort of stuff. The bond yields, as I say, that was his Achilles heel, because they started to rise, and that's when he blinked, because China buys a lot of debt and they've got to fund it. And if China just starts going, actually, not only are we not going to buy any debt, we're going to start selling our debt, and let's see how you get on with that. And when your bond yields start to rise like that, that is a big problem. That can cause a massive collapse in your economy and a massive collapse in confidence. Now, it didn't happen, and I didn't expect it to happen, because one thing one thing we know about him is he will negotiate, and these problems will get sorted out. So it was something that was in the background that we thought had actually been absorbed into the market. It caused a big shock and is being absorbed, and it's been absorbed quickly and given the rebound, and then we'll get secondary reverberation. So that might mean the market goes down again. Just when you think it's all okay, it just comes off again. And in between that, the market will stay nervous and a bit jittery. And then I think it will settle down and the trend will just go back up again. And it's showing signs that it wants to do that already by its, strong rebound. But I think it will also have a second order effect that we should be aware of. And that is that at a later stage, when you've completely forgotten about me saying this, when we do eventually hit the top, the people who are looking to sell, when we get that first move, like the move we saw, that will be the first move of a very big move to the downside. And that they will say, oh, we've seen this before, and last time this happened, the market went up, so we're just going to hang on. And I know it's a hodling thing to do anyway with Bitcoin and some other, coins or whatever you might call it. And yeah, that's been the strategy, and it's been a wild ride. But at some stage, there will be more than a significant correction, and it will be time to perhaps exit. But that's further down the curve, and we're clearly on a weekly channel. We don't have to mention it until it gets closer. But I just think it's interesting how the psychology sets up.
I definitely like to mention that now, right? Because I trade the 4-year cycle, right? So every 4 years it goes massively up, and part of making money during that 4-year cycle is selling when everybody's coming into crypto. And it does end like that. When it comes down, there's a massive correction down, and then everyone's reassuring you that, oh, no, it just does this. It's not the end. And they'll go up a little bit, and then it will go massively down again. And you have hit the top, and you start to realize it, but you kind of hope, and then you hold on to your bags more. And then it corrects further down on you, and you realize, oh, crap, I missed the top. And now you're selling at, 70 or 80% down from the top. And if you bought cheap enough, and you did take some profits, you may still be in profit, but a lot of your profits get lost at that point. So that point is coming, right? And it happens. The greater it swings upward, the more likely we are to have a massive correction to the downside again. Like, I think we're going to have a raging bull market. I think we'll have a big blow off top. And if that happens, then we're going to have a major correction afterwards. And the majority of people will be trying to reassure you that this isn't the top and it's going to keep going up. And that should be a warning sign.
Yeah, there's an interesting comment about is BlackRock saying we're already in recession. Recessions are good because even if they think we are, rates will go down, and that'll just push the market up. The dollar's going down, which is effectively a rate cut. Oil is going down, which is effectively a rate cut. It's why the market is so resilient, and I think underlying business will get a boost. I think the leaders of every country now will be more likely pushing politically for lower rates to protect their industry. So, the British Prime Minister should be pushing for lower rates because of the exogenous shock that's coming from tariffs. It's something that trips off. Yeah, tariffs, we got problems, cut rates. They're going to do that. They're not going to want to put money in actual tax cuts or anything like that, I don't think, because that costs money and they need to fund it. So the cheapest thing to do is to lower interest rates or have pressure to lower interest rates. And so any signs that we're going into recession, any signs of weaker data are now even more sensitive, I believe. And that's what will cause the next move up. But, as I say, could be these things. There are times when you see this sharp move and then it goes straight back up again. But I think we're not in the summer, but we're going to be heading towards a period when the market needs to consolidate anyway. And so it had a good run, and people have seen high vol, which means that they're just going to want to calm down for a bit, and we'll see if volume goes down, which I think it will. And I'm applying that to the stock market more than Bitcoin, but just a consolidation would be good because we've had a really strong upward trend. There's been a lot of attention. I don't actually like it when there's so much attention on these markets, when there's so much in the main headlines, like with Trump talking about crypto, with all of that stuff. That for me is, it's a bit of a warning sign that too many people are looking at it. We want things to go quiet. We want the market to go sideways. Then we want it to start moving up without the broader market discussing it. And then for me, that's more likely to be a stronger trend. I mean, you see a little bit that people are talking about the dollar going down, but not much. It's interesting, isn't it? Considering how much it's actually collapsed. There aren't that many headlines about it, and these are massive moves we've seen in the last. This is the biggest thing that's, apart from obviously the correction, it's not back at the high, but apart from that, outside of that, this is the biggest thing. And there's far more volatility. Sorry, not volatility. There's far more volume that is traded in currencies than in anything else. It's probably $4 trillion every day in volume that's traded in foreign exchange. So we're talking huge numbers of and a huge impact, but it just doesn't really compare to the bond markets and the stock markets, which it's all understandable. I mean, if you say that, it wasn't so long ago that the dollar index was 108 and now it's trading at 99.
I remember
for the man
that.
on the street, that doesn't really mean a lot. But it might do when you get to your holiday period and you start deciding to go somewhere and you realize that the dollar buying power seems to have gone down quite a lot. But especially if you're a corporation and you haven't hedged your risk, it works positively and negatively to certain companies, but certainly companies that are selling products, it's a positive if you're exporting.
With the way things are playing out, crypto usually has a 4-year cycle where every 4 years it goes crazy. There's a lot of people in the crypto space that are looking at the charts and looking at the markets, and they're just in complete despair. And they're convinced that, well, either the bull run is already in or it's not really coming this cycle. You follow crypto as well as a lot of other markets. Do you have an opinion on that?
Well, my opinion on it. I've said it about every single time I've come on the show. I don't think we're at the top. I just said it a minute ago. I think the markets are going up, and this is, an indication that the overall market is strong. And so, everyone's got an opinion, and everyone and anyone can be wrong or right. It's like that's the beauty and the democracy of the markets, and I don't don't claim to always be right because I can get it wrong. You know, I didn't think we'd see such a correction, and we saw a big correction. You know, it surprised me. And but that's because I was looking for different signs that the market had topped out, and those signs weren't there. So what we got was an interim aggressive sell-off, which was driven by something that we already knew about. So if you'd asked me, should it goes down on tariffs, I would have said no, because we already know that. We've had. Let me show you a chart of I want to show you a chart of the Canadian dollar, right? And you'll say, why are you looking at this? And I'll explain. So the Canadian dollar was one of the weakest currencies against the US dollar, and it was running up before there was any talk about the tariffs. So here we had. Now let me just recenter this. So this is very similar to what the dollar index chart looked like. And I was saying, you know, we're going to make this is the chart, and then we're going to come down here and we're going to break lower. But then suddenly, when the dollar index was at 100, looking to break lower, this was at 134, and it just went straight up, and it went ahead of everything else. Now, why did it do that? Because people are writing these documents about tariffs, and they're saying they're going to get hit, and that gets fed out into the market. So they go sell the hell out of the Canadian dollar. So the Canadian dollar hit a high in February. Dollar Canada. So the Canadian dollar hit a low in February of this year. So in watching that, I was thinking, okay, this is the market. This is the currency markets that you guys may not be interested in. But to me, it tells me that the tariffs are being priced in. And it was priced in then. And what's happened since? All the announcements, it went sideways. And then when it was supposedly really bad, the dollar just went straight down. And that was all technical. So, you know, there we get a double top. So that's why the market reaction to me was so strange, because I mean, not strange. I mean, it was right that it did it, but you know, this is what happened in the dollar index, which actually topped out in January. So the Canadian dollar remained weaker and then started to strengthen because of the tariffs, right? And so what the market is saying is it's going to shrug it off, which is kind of what I thought it would do anyway. But at the point when I was expecting the dollar to break 100 and continue down, that's when it went off on this sojourn, if you like, and it was all tariff driven. So look at the way it's gone up. Look at the way it's all retraced. This still looks like the dollar's going down. It looks like it's going to go down quite hard and much further. So, there are times when, of course, the market does things that you don't expect, and it has to be put into the context. Like, you look at the 4-year cycle, and there are people that are saying recession. There's people that are saying that the move is over, that the markets are going to go down, they're still going to crash. All of that stuff is stuff that we've heard on the show many, many times, haven't we? All the way up, and it hasn't happened. So, you know, for me, it's still part and parcel of this broader risk on phase. And it, you know, judging by what we're seeing here, the trends don't look over. The sentiment doesn't look right for it to be correct. And so therefore I'd expect the markets, once they've settled down, to then go higher. But, you know, could I be wrong? Yeah, absolutely. You know, and if I'm wrong, I'll be the first to admit it. It is possible, but again, we always say we're playing probabilities, and the probabilities look like the market's going to go up.
Would you, looking at that, the way the charts were pushed down like that, even though the tariffs were already known, is that sometimes a sentiment by big players to push prices down so they can accumulate more cheap?
Well, I don't know. I mean, you see, that kind of plays into the kind of conspiracy theory thing. And again, I talked about that when I used to work for as an analyst for a major investment bank in the UK. You know, I was in London, and we had clients in different regions around the UK, and these were small corporate clients that we would go and see, and we'd talk to. You know, there'd be an economist, and there'd be me, a technical analyst, and we'd be telling them what we think will happen the next year. And they would often say, "Oh, you boys in the city, you're always pushing the markets around, so we lose money." You know, and it's like, nobody's doing that. It's like, but it might feel like that because the markets are very psychological, and when you're levered, or when you've got the wrong position at the wrong time, it puts you under pressure, and headlines are there to make you scared. It's all of those things are very difficult to trade under, and that's why it's not easy to fall into trading and make money. It's hard. So when I hear, do they do that, I think there's an element of, I can understand why people might think that, because the headlines never seem to work with what's going on. Like the panics seem to just, and again, we've mentioned this on the show many times, how, all these big things that are supposedly going on, we're not talking about now. So we're not talking about the Middle East. We're not talking about Ukraine. We're not talking about Silicon Valley Bank. We're not talking about all these things that are supposedly would have caused the markets to be in a strong bear market now. And so the market seems to have this goldfish bowl type attitude to news, and it's right, what's hot today. And it happens now. I'll mention it, you'll see it everywhere. It happens with everything. It happens with, remember Liam Leeson when he said what he said, and people thought his career was over, and then people forget even who said it later on. When he said that he wanted to go and be violent towards somebody, and it was like, you can look up the details, you may have even forgotten it, you may not have even heard it, but it's like there's an old expression that today's news is tomorrow's fish and chip paper, because in the old days in the UK, they used to literally wrap fish and chips in newspapers, old newspapers. Obviously that's a very bad thing to do from a hygiene point of view, but
yeah, great
kind of
to get some ink with your chips, right?
Exactly, but that's kind of how news is, and that's what you remember. You're seeing a filtered version of the news. You're not seeing the actual news. That's why I use charts. And the charts are telling you, one way or the other, what the underlying market is actually doing. Whether it's actually strong or whether it is actually weak, and that's why with the dollar, there were signs that it was going to go one way, and the signs that it was going to go another way, and with regard to Bitcoin, it's not like it's in a bear market. It's in a bull market. It's had a really good run up, and it's had a strong correction, a stronger correction than perhaps we were looking for. But, I'm pretty sure I said it could go back to 70,000 when it was coming down. So it wasn't like it was impossible. It was just, it went a bit quicker than we expected. So, overall, the structure of the market looks pretty much the same. It's just that the market needs to absorb this this shock. And yeah, there are big players who push the market around. There's information that flows to people that we don't get, but that's again why I find looking at the chart helps you to get the probabilities right for when people are buying things without without actually telling us or being able to read it in the newspapers, because by the time everybody's read it, it's too late.
Yeah. Well, what other markets are you looking at? What kind of things, what little bits of information are those markets giving you?
Well, let me just show you, what's happened on the main charts. So, Dow hit the 45,000, corrected very aggressively. It's had a retracement, and it's come back up to the point of the sell-off. So it's literally stopped where if it broke this, you would have shorted it, and then it's come back up to retest that point, and it stops. And it's not surprising, because that is a really important level. It needs to get through that level. It's normal that it would stop there, and I think there'll be reselling there. So maybe the market will come off again, and that's why I expect a consolidation of some kind. And we can see how these highs have been going lower. But again, a consolidation going sideways would be a good thing, and it's in the context of this longer term bull market. So sideways would be good. Same with the S&P. It's had a rebound right back up to its previous level. Again, that's good. It's not a crash and then a crash, which is clearly not what we want to see. Let's have a look. Let's have a look at Hong Kong. And that came off a major level there. I still think that's basing. The lows are still moving up. We've got gold, which is going gangbusters. That's a trend that, you know, again, we've mentioned many times, saying that it's just going up, and today it's up again. Silver's probably going to do the same. It's just getting ready to break into new highs, and copper is doing well. It's recovered some of this move, and it could well be a little bit, you know, sideways in this range, just because of this volatility. I mean, that's just mad the way the extent to which it's sold off. But people are still going to need copper, and ultimately that was possibly a fantastic buying opportunity. Well, I think it was a great buying opportunity for the long term, and if it keeps people out of the markets, then maybe that's why it's done it. So I still believe longer term this is going to be going up and attempting to take a high out, but you know, that I could be wrong, but that's what I think. So with regard to yields, they are now moving lower, which is a good sign. We're seeing, so let's look at 3-month money. See, 3-month money, said many times it looked like it was going down, and it did go down, but it's come back up again, and it's been a bit volatile because there was this sense that if your bonds start to sell off, you have to raise interest rates to attract a high yield to make people buy bonds. So it can, this is why bonds getting out of control is really bad for your economy. And it's why economies can go into a tailspin, because if you're raising interest rates, as they did in the Asian financial crisis, to protect their currencies, what it does is it causes a greater recession quicker, and that then self-feeds where bonds get sold off, which creates a recession, which creates interest rates needing to be going higher, etc., etc. And that's happened many times in history. Now, I'm not saying we're at that stage. I'm just explaining why watching interest rates is so important, especially basically short and long-term interest rates one should keep an eye on, just to know how healthy your economy is. But the 10-year yield went all the way down from 3.86, and it shot up to 4.6% very quickly. And that is, Trump would have not liked that at all. That was frightening, you know, for him, the way that was sold off. So it's coming off again, which is a good sign. So it means that bond yields in the 10-year and the 2-year are coming down, especially in the 2-year. It just means borrowing will get cheaper, and that's good for businesses. And that's why, you know, the markets want to see this a bit lower again, back to 3.5%. If they get through there, I think the equity markets will break those key highs, and we'll see the trend continue to the upside. And with regard to Bitcoin, it's kind of in a similar risk. It's had a really good risk on bounce, and it should consolidate again. Now, whether it will break through its resistance is another matter, but the first step is it's broken this downward trend line, and maybe it's a bit faint on your screen, and I'm not sure, but there was a downward trend line here. It's just got through it. Support was down here at 73,000. It didn't even hit it. It bounced before it, and I'd be happy with it going sideways. But the real level that needs to take out is around 88,000. Call it 89 for where the resistance is. So you've got that low and this high, very well defined. If it goes sideways for a bit, I'm happy. If it breaks through that, that's for me a good signal that it's going to go back up to 100,000. So at the moment, it's in a consolidation, and it's held some good levels. So that's what I'm looking at. I'm just trying to think if there's anything else. We've seen the dollar index. You can see where that's going. That's going down hard. Yeah, that's kind of it on the major macro themes.
Chris Ashbay asks if you could check out USD KRW as well.
The Korean won. Why would you want to look at the Korean won? Yeah, Chris, you ask about gold and lots of interesting things. I like it, and I think you kind of get the big picture. Yeah, dollar Korea, right? You're gonna have to put why you want to look at this, because I'm really intrigued. But that's a lovely top. That is a brilliant top. I haven't looked at that in a very long time. But that, you can see that 1, 2, 3 breaks the level, down it goes. Yeah, so that looks like it's going down. Are you perhaps going on holiday there? That maybe that's why. But yeah, that looks like a great technical pattern. And if, you know, I'm not here to give trading advice at all, but for me, if I was trading it, I'd be looking on the short side, i.e. short US dollar.
One more question. Kyle asks, if you had to guess, crypto blow off top 2025 or early 2026?
Why early 2026? I don't think, I don't know. I don't like to give timings on these things. It's more, you know it when you see it, sort of thing. But it seems too early now. So if you forced me to give an opinion about when it would be, I'd say next year. Just because if it's going to recover, it'll recover this year. But cryptocurrencies are also highly risk on, and they're the most risk on of risk on assets that we've ever had. We've never had assets like this that are so sort of, I mean, whatever your opinion is, they are highly speculative in every way. So the signs that the broader macro theme is ending will probably come from cryptocurrencies going down. And so it may lead a move in some of the other markets. So maybe they'll come down, and then you'll hear the story, well, you know, cryptocurrencies are being sold, and that's people are taking that money and they're putting it into the stock market. You might hear something like that. So you could see a continuation of risk on in one and not in the other. And you might hear the inverse of that. You could hear, you know, stocks are going down, but crypto is still going up, because there's still this non-correlation, and a certain amount of non-correlation between the two assets that is interesting. And that's why people like to trade in it. But broadly speaking, I would say, given the fact that I think actually this whole situation is going to end up being a positive, because it'll mean rates go down, it means the dollar's going down, and that will almost, you know, spike the next move up in risk on assets. It's more likely to be next year.
Great. And Chris saying, I think the Korean won is going to collapse against the dollar in the long-term view.
Yeah, probably, but I don't know. I don't follow Korea. I just look at the chart, and it doesn't look like it yet. But maybe it will one day. That sounds like a fundamental view, and it may well be very well researched. But all I can tell you so far, the dollar is weakening, and the next major level is 1,400.
Awesome. Well, let's jump into what go ahead.
Sorry about that. I didn't mean to jump over you there. Long term is I don't know what you mean by that. It could be 3 months, could be 6 months, could be 10 years, and you could be right if in that case. So I don't really know what long term means.
Yeah. What I'm looking at on Bitcoin is, this is Bitcoin historically, and the year after the Bitcoin halving, Bitcoin in particular has always gone crazy. So the first Bitcoin halving was in 2012, and in 2013, late 2013, so November, December, Bitcoin went absolutely crazy, and then it corrected down. Notice this savage pullback. Then it went up, savage pullback again, and then it just continued this cycle down. Then we saw in 2017, Bitcoin going massively up. So a little over 4 years between the two. Now, 2021 played out really interesting with this double peak top, where earlier in the year it peaked out, and you actually did see that same kind of thing in 2013. Where early in the year, Bitcoin went way up and then pulled back. And then later in the year, it ran again. We saw something like that in 2021, where we had this really early run. And this coincided with a lot of liquidity coming in because of COVID and stimulus checks. Bitcoin ran up like crazy, came back down through the summer, and then ran later in the year, coinciding with Facebook changing their name to Meta and making metaverses a big deal. Bitcoin slightly exceeded the highs here and then corrected downwards. And here we see Bitcoin just meandering along, generally upward in an upward trend, all the way up from its lows of close to 15,000 and sitting right now at 83,000. And this is why I say the peak hasn't happened yet. And it's still coming. We haven't got anywhere near this green line yet. And there's a chance with all the institutional adoption and country adoption that we blast through that green line. But we'll see how that plays out. They call that a super cycle if that happens. And since I've been around 2017 and 2021, everyone said it would be a super cycle and blast through that green line. Well, it hasn't happened yet. So we'll see if it happens this time. Let's take a look at the first one on our list today to look at is XRP.
Yeah. I'll just say very quickly, Chris, I agree with you over the long term, and it will come in the next, when the market crashes again, the dollar will go up, the dollar and the Swiss franc and yen, because those are risk off currencies. So when things start to go wrong, people panic and they look for markets that are basically safe havens, and the US with your military might is the world's safe haven. So it will go up, and the Swiss franc, because of its neutrality, its gold and its banking system is neutrality. So the Swiss franc will rally aggressively. So yeah, XRP. Sorry, I don't know why I couldn't find that for a minute. It's rebounded, isn't it, back into this zone? I mean, this was looking like it was consolidating before a move higher, and again, it looked interesting, and there was a possibility on this Trump comment about a reserve that it would push higher, but not to be. I got that wrong, because I thought maybe the comments that would come out after he announced it were there to make it go higher, but it looks like it was already taken up by this move here, and there's still a consolidation going on. I think if this market wanted to be really negative, it would have held below this 176. It's recovered that quickly. I think we talked about that being the level last week. It's now in the middle or lower half of this major consolidation, which is very hard to trade. So short-term traders might be trying to pick lows and pick highs. I think you've got to be very careful about doing that. We just want to look for the big picture view. And I think in a big picture view, the outlook is still positive. But it will probably in the short term go sideways. So, I'm thinking it looks good compared to some of the other coins, some of the other markets, because it's still holding on to the majority of its gains, and it's had a really good rebound. But it's still got this area here that it needs to get through. And the first step of that is at least getting halfway. So the summary for me would be positive long term. In the short term, I think it's a wait. We have also got this downward trend line that we could use as an indication that things are changing. In fact, we can put two in there, this one and this one, which it's going to lean on right now. But either way, I think range and then back up. So it's a wait for the moment.
Yeah, XRP is one that I really like for certain time frames. So let's see. Well, that's the chart I was looking for here. So XRP's market cap is really, really high for cryptocurrency at $122 billion. XRP is such an interesting project, but essentially, in my opinion, it will replace the financial rails. So SWIFT, which is what a lot of money is transferred through across countries, will get replaced by XRP, which is almost instantaneous, very, very inexpensive to transfer money. And I think especially under Trump, the US is fast tracking that. And a lot of people really aren't realizing it yet. So when Trump won the election, or just leading up to it, but especially once he won it, you see, bam, XRP just took off. And then it's been corrected backwards and settling some. So the question is, can this market cap go higher than this? And I think so. Some people say that the market cap can't go way higher than this, that it'll never be higher than Bitcoin. And Bitcoin's market cap is, let's see, I don't even know where Bitcoin's market cap is today. Let's take a look at where it is. Bitcoin is sitting at a $1.6 trillion market cap. So compared to XRP, that's about 14x from here. Now, what's interesting is XRP did actually exceed Bitcoin's market cap for a brief period of time in 2017 when it blew off to, it doesn't show it here, but it went to over $3 in 2017. And so we've already seen XRP exceed Bitcoin's market cap. Now, why would that make sense? I think Bitcoin is an amazing alternative to gold as a store of value. XRP is something else. It has a utility and function to it that's different than what Bitcoin's is. And I think when people realize about XRP, you will see a rush of FOMO into it. Just like we saw in 2017, where it went absolutely crazy, probably ahead of its time, and went to like $3.30 in 2017. That was a little bit too high for back then. And we're not even at those prices right now, 8 years later. So I think it's a good price. I like to see that it's come back down. And so when I have people that are looking to invest in crypto for the long term, if I were in that situation, I was looking to just hold something for 10 years, 20 years, XRP would be my choice. Now, XRP, it is possible that even just within this bull market, it goes to something crazy like $100 or $500. And I like that about the upside potential. Even in the short term, it has some upside potential there. I can't say I would give it less certainty that it does something like that in this cycle than the higher probability that it does that in the coming 10 or 20 years. And so what I like about XRP is I think it's entrenched enough that it doesn't go away. So I see very low risk of like it failing and going to zero. I see high potential upside for the long term, and it could also be high potential upside for the short term. And for that, I really like it about it. So if I were buying for a longer term hold that I just wanted to stock some money away for 10 or 20 years, but it could go crazy this next year, XRP would be a good choice for that. And at $2, it gets a buy from me after correcting down from the $3.30 it hit recently. So I like XRP. I have some friends I'm going to be talking to later today, and I know they're going to ask me, what would I buy if I were in their shoes? And if I were in their shoes, XRP would probably be half of my buy. All right, so let's take a look at the next one, which is XDC.
So XDC, that was looking quite bearish, obviously, when it broke this 6.5 cents level, because it was such a major support. Similar to XRP in the sense that it had a good run up and it was in a consolidation. But we put this line here for an indication that when it broke, it might weaken a bit. And then it hit the next support level, rallied against that line really nicely. So this line has been important. Again, on this resistance point, it's come off. So that seems to be one that it's respecting. But overall, I think of this as, if I was trading it, if I was a very short-term trader, what would I feel about it? What would I have done? And I would have shorted it through this 6.5 cents, and it's come straight back up. So I'd have had to cover that short. So that hasn't worked. And therefore, for me, the balance switches more to the upside. Now, one could buy it and get caught on that way, and it comes back down again, and you get whipsawed, which is what happens in markets sometimes. But overall, the main trigger point has been rejected, which I like. So I think in the very short term, it's still a wait, but I do like it. I think it's definitely one we have to come back to because it's showing strength. And it may well lead. We mentioned last week, there's a few that might lead the rally or lead the market or the broader market out of this bear phase. And this is one of them, as well as XRP. So the first two are like that, just because they're relatively strong and they are showing some signs of strength. So it's a wait for me from the short term, but longer term, I do like it.
Great. All right, let's take a look at XRP and XDC because they have some similarities. If we look at the price of XRP, when Trump won, XRP went essentially 5x and then a total of 6x up before pulling back. And XDC did something similar. So right around that same time frame, it went absolutely crazy from essentially 2.5 cents all the way up to almost 15 cents. So it went about a 5x up, and then it's pulled back down. It's lost half of its price, corrected back downwards. So what is XDC? Well, XDC is a blockchain developed to support trade finance and the tokenization of real world assets. So there is a big narrative about real world assets and what things are going to be tokenized on. And I don't think everything gets tokenized on the same chain. Which chain do things get tokenized on? I don't know. There's a big token that's fighting for that space that saw some major correction downward. OM is the token. And they're fighting for that. It looks like it was just some FUD about moving some tokens, the team moving some tokens over to an exchange, and that probably they'll be okay. But I don't know which ones are going to end up getting a lot of the business. If I were involved in like the government discussions, I would have a better idea. And probably a lot of those, sometimes in conferences where these things are discussed, they'll speak about it. It doesn't catch major traction, but some of those are televised and you can watch. And that would be where to watch, because determining like where governments go with this and what they green light for, say, assets to be written to. For example, the state of California is allowing their DMV stuff to be put on Avalanche. Okay, so that is some real world assets going on Avalanche. So is XDC going to get that business? Which chains are going to get that business? I don't know. I'm generally staying away from that. Now, along the same lines, I know that, XRP seems to be getting the financial rails, and that's why I'm such a big believer in that. There are so many videos where Japan, a lot of Europe, and the US are building on XRP as the financial rails and some of the other ISO coins. So XDC is interesting from that standpoint. Do they end up getting the majority of business? I don't know. Possibly. I don't have the information to know. I'm more of a fundamental investor. I'd say overall the charts look bullish after this big pullback, and it does tend to run with XRP, which is good news. I think in the bull run, it sees a lot bigger highs than this. I'm just going to give it a wait. This just isn't my narrative I know as much about, and that doesn't mean it's not a great narrative. It's a fantastic narrative. I just don't know who's agreeing to what and which countries are agreeing to what as far as which chains might see the major adoption. So it gets a wait for me, even though I would say there's a lot more upside to go from here in the bull market. All right, let's take a look at our next one. Ray for Radium.
Yeah. So does this look right, by the way? So, is it okay? $2.37?
Yes. And I'm going to step away just for a second. I'll be right back.
Sure, no problem. I'm sure I can talk for long enough. So Ray is an interesting chart here. Remember when we were looking at some of those altcoins that reacted on August the 5th and how they rebounded quickly, and that was a good sign. I think this is a similar thing that we can look at now with Monday the 7th and how that got sold off and rejected, and its structure is it's still in an upward trend. Okay, it was correcting from this $8. I mean, percentage terms, this is crazy, right? But this is what we're dealing with certain altcoins. But it's showing signs that it wants to base, and this is actually quite an interesting pattern. It's called a double bottom, and it's just broken through at $2.37. So for me, look, I think structurally the market is still nervous, so we have to sort of temper our outlook slightly. But I would say, from a technical point of view, this looks like a buy, and I would put a stop below that low at $1.40 If it breaks that, then I'm out. I don't really want to see it anywhere near these levels around $1.70, because when a pattern completes, a technical pattern, we go back to have a look at the Korean won. When it breaks, you want it to break cleanly and for it to go down. And same with this. When it breaks, we want it to go up quickly, and any hesitation is a sign that maybe it's not going to work. But overall, the structure of the market is still bullish, going back to October, 23. So I think that should continue. There's a lot of support around 1.5. We can see how it played around there for a long time before it broke out. Doesn't guarantee it's going to go higher, of course, but this is just the probability I see. So for me, I put it in the buy camp, and I'll put my stop, and we'll just have to wait until we see it again. I mean, don't know if we have looked at this before. You can remind me whether we did or not.
It's been quite a while.
Yeah. So, I can't remember what we said about it and at what stage we looked at it. Look, it might have been here, in which case I would say at $6.30 on that breakout, I would have been bullish. I can tell you that now. But that's how we trade technically. We look for a breakout to a high because we don't know that it's not going to continue. Now, you might say, well, look, it didn't. And yeah, but look at gold and see what that's doing. That's why we try and take these breakouts. It's knowing when you're wrong, which is when it comes back into that pattern, that trade hasn't worked. And that's when you've got to start to be cautious. And we see when it breaks out of this whole pattern, that's when you get the big sell-off. So there were signs that this was going down anyway, but now it looks like it's reforming a base. Again, I'll repeat, it doesn't guarantee it's going to go up, but it looks like it is forming a base and the probability is shifted to the upside. So hopefully we'll look at it in a few, weeks time, or maybe a month or so.
Yeah. So it's been a while since Radium has hit my radar. Now, I don't follow the Solana ecosystem extremely closely. I don't know who's going to end up dominating in that. Like Solana, I like because it is fairly fast and it has some adoption. But a lot of the adoption has to do with meme coins. And a lot of this run with the Solana ecosystem had to do with meme coins. And meme coins were being traded and minted tremendously during this period, which gave Solana a ton of traction. And Solana broke way, way up here and then corrected downwards when most other things weren't doing well. So everyone was talking about Solana, because all the meme coins trading on it, and it went really high. And so there was another Solana DEX that did really well during this time frame that had recently launched that everyone was talking about, Jupiter. And it's come off too. But Radium is a DEX that's been around for a long time. And you see Radium's price got high when Solana's price did, as everyone was trading these meme coins. And then it came back down. And it's starting to turn around, show some signs of life. Now, do I have Radium? No, I don't generally love the Solana ecosystem, especially as it got really, really high from all the meme coins. Now, meme coins will probably always be a thing, but they're not my thing, and they're not what I trade because there's not really much fundamentals to research. There's not a greater mission or thing that they're trying to accomplish that will bring down real world costs or increase real world productivity. Those are the type of businesses that I try to invest in, and the cryptocurrencies associated with them, or they have some long-term value of why they might sustain, versus meme coins are kind of like, I don't know, a fan club. And so they're just not my thing. And Solana, I'd like to see it get more traction, and it has got some traction in DeFi, but it's held, huge amounts are held by a small number of investors. And that always concerns me a little bit, that they're well-connected insiders that, I don't know. And maybe for that reason, Solana will ultimately stick around, but it's not my gig. So I do like the Radium DEX. When I do trade on Solana, I do use Radium, and it's been a really good DEX for me. So let's look closely at what this price is doing recently. So it came back to a price floor that I do like at this $1.40, and it's going up above that. But for me, I'm just going to say this is a wait. I like to buy low, and at that price floor, it's a really good price. We might see, even though it's got some recent momentum, that it comes back down near that. And then if I were looking to trade a Solana DEX ecosystem, this might be a good one. Its market cap is below $1 billion. I don't like to touch things over $1 billion unless it has something really good behind it, like XRP or like maybe Cardano. I still have some Cardano that I haven't sold. I haven't been buying more of it. But a lot of what I'm buying has a market cap, 50 million and below. So would I actually be buying Radium? It's really not my bag. But what I'm interested in is different than what many of you are interested out there. If I were looking at Radium wanting a Solana DEX token, I'd be waiting for this to come back down to the $1.40 or $1.60 range. So that's why I give it a wait. Let's take a look at JASMY, which we haven't talked about in a long time, and see where it's at.
Yeah, JASMY, very interesting. I just want to go back in time a little bit to when this was basing out and we got this very strong breakout over, well, but just below a cent, 00832. So that was the breakout point, and then it trended up really nicely and looked really bullish, to be fair, and it looked like it was going to continue. Then we got a correction, and then it broke out again, and that was short-lived. You see, it broke out, came back very fast, and then it went into this downward trend from here, and it continued down. I think we were looking at a few times, perhaps trying to identify some stopping points, and 1.6 cents, clearly big level, took that out cleanly, and it continued this downward trend. But if you look at where it stopped right at this breakout point. And this is why it's a good idea to look at these long-term charts to see where the support comes in. It doesn't always hold, as we've seen. Like this is how we look for them. But as we saw with the markets, the S&P and the Dow, it stops at really significant resistance points. And this is done exactly the same. What it's also done on this rebound is it's recovered far more than just a day or two of prior price action, and it's broken this downward trend in terms of its structure, because this is a bigger, stronger move than we've seen in any of the moves on the way down. So what we'd identify there is that the kind of market structure, the dynamics are changing, which is a really good sign for it to be turning around. Now, where it stopped, or where it's close to right now, is this prior resistance, which is where that there's been buying here, because that's where the market's bounced. It's stopped there. So every time it stops, there's buying. So there is supply. There must be supply from here as well, because you would have bought it given what it had done in the past, but it actually went through. So the fact that it's come back here means that there's a good chance it will consolidate, and it's starting to come off a little bit already. But I'm interested in this bigger change in dynamics. So even if it does come down again, as long as it holds over this 00832, I think it could be quite interesting for a move higher. So in the very short term, I think it's a wait, because this is the first bounce. We might see a correction and then a move higher. But longer term, I think it's a very interesting chart, and I do think it's got potential to go up.
JASMY's a really interesting one. We covered JASMY a lot when the price was down here. And I like to buy cheap and sell high. Now, at some point, it caught some massive traction, went way, way up. And so it's no longer in my buy zone. When it was way down here, I felt like it was just too underpriced, which is why I covered it a lot. I even did some videos about JASMY. Now, JASMY is an interesting one. I like to usually have more fundamental research than I ever could get on JASMY. And the reason is most of the fundamental research is in Japanese, and I don't read, write, or speak Japanese. So I couldn't understand what most of the news was about JASMY. What I liked about it fundamentally is that a bunch of Sony execs had left and formed JASMY. So I would say it's got the right type of leadership that I'm looking for. And a lot of the crypto projects out there aren't run by such high profile business executives as JASMY. So clearly there was something going on there. It was just hard to tell. And it had gotten absolutely devastated in price during the bear market, which is what I like. So I covered JASMY a lot, and then it went 10x and higher from there. And it's corrected downward some, and it's still 5x up from these lows. But yeah, just not as, it went all the way to about 6 cents. Now it's trading at 1.4 cents. It's close to 1.5 cents. So is it the buy it was? No. Is it still a buy? I don't know. I love it, these cheap prices. This is what I do, is I accumulate when prices are really, really cheap. And then when they go up, I just figure, well, shoot, that's a boat I missed. Unless I have a good indicator that it's going to do really well from here. I don't know whether JASMY ultimately survives. It seems like they have amazing inroads into the Japan political environment. And a lot of the Sony execs and former Sony execs that are running this have good ties to the electronic ecosystem. And we'll see what kind of, I guess, railways that get set up for potentially the Internet of Things being built on JASMY. It's hard to tell where exactly that goes, but I do think this at a minimum survives until this coming bull market, which is what I really liked about it. Ultimately, do they get enough traction to be around 10 or 20 years from now? Possibly. But I'd say highly likely that they get enough inroads to stay around through this coming bull market. And that's what I liked about it. I just don't like it as much at a higher price. If you did happen to accumulate back here, you're in an amazing position because you're already up. Perhaps you even took a tiniest bit of profits here, and maybe you've even gotten your initial out. And so from here, it's just all further upside for you. Will it pull back further before it goes up? Possibly. Narratives don't stick around for forever, and it did this when most other things weren't doing well. So it may pull back and get cheaper. And if it enters back into this zone, well, then it's in a great buy zone again. So we'll see how this plays out. For me, it's just a wait now. All right, so that's what we had on the schedule. I haven't seen any suggestions come in for us to look at yet. Metal Detecting England was asking if we'd covered JASMY yet. Way back half hour ago, we had not. Still holding my 10 million JASMY, fingers crossed. I would say you're very well set up. I could see JASMY going to over 10 cents, maybe well over 10 cents. So 10 million, I think you're going to be happy with that one. Well, we'll give everyone a minute if they have some ones we want to look at. What else is on your mind this week, Paul?
Well, we've looked at the markets, and that's it, really. I mean, it's always usually the market. So just what's happening. So yeah, I mean, I'm looking at commodity currencies, but I don't think you guys are that interested in that stuff. Yeah, just broadly looking across all the markets, seeing how the FTSE reacts to this sell-off, because of course it's more kind of my home market, and I want to see the relative strength. But yeah, just looking at yeah, we're being asked about Definity. I don't look at Definity just because, you know, you know why. It's
what
basically,
could you share with us on insights on China's market and how things are going there. I've read some articles saying China's really getting hit with this, that some of their factories are like at a standstill.
yeah, maybe, but it's
side and other market side.
Well, if that happens, then the Chinese will just, you know, cut rates and boost the economy, and I think that's that's all that's going to happen next. And I think it's ultimately bad news is good news. I know it's a very contrary thing, but And also, you have to remember that news headlines are generated by news companies that want to sell bad news. Bad news sells, so they'll find it and they'll put it out there. So how important it is to the overall economy is another matter. That's what we'll see in the markets. So, going back to sort of the beginning of 24, when nobody thought, actually, do you want to just put my chart
Sure.
up? Because so looking at the beginning of 24, this was when practically everyone I could find was bearish on China and saying that it was a short, it was deflation, it was definitely going down. And then it had this rally correction, and then all the stimulus came in, which sent it like a reverse crash, if you like. It went up so fast. That's come off again. And of course, it got hit recently. But I wonder whether it got sold off here because there were, people had an idea of what was coming. But in any case, the nadir, the lowest point, looks like it's been hit. So it's still rising from here, which I think is important. It's printed here, higher low, higher low, if that sticks. So I think it's going to get back up here for the, in the next, I'm not saying it's going to necessarily do it quickly, but it could take until next year. But if there is any bad news, there is going to be more political leaders are going to see this as an attack on each other's countries. I mean, it's called a trade war or a tariff war for a good reason. And that word war means that, blood is going to be running hot and they're going to, do things to support their economy. So I think ultimately that's a good thing. So it'll push on risk on. So yeah.
Now, Romans, yes. If we had to guess, do you think the crypto market can go parabolic without the macro environment being clear enough?
Can it go parabolic? I mean, yes is the answer. The macro environment is not unclear. The macro environment is relatively clear. It's still there's just a few more things that need to slot into place. It was lower rates, lower dollar, rising stock markets, and broadly rising stock markets that have just been interrupted by this very sharp move that we've seen recently. So the macro picture is still clear. But yeah, I think they will both work together in the end, and markets can, in various phases, go off and suddenly start rallying and more money comes into it. I mean, there may be a bit of that going on with gold. I mean, gold is going up at such a clip now that I think it's becoming a bit self-feeding, and it's doing that without lots of other precious metals doing it. If in fact, let's look at it. So we got gold going up, straight line. Does it need the others to go? Well, silver is looking bullish, but it hasn't gone yet. And then you've got platinum, which it's rebounded, but it's not anywhere near as bullish. Look, it's just a range. And palladium is the same. It's kind of stuck in this range. So it is possible that Bitcoin or certain certain coins can go and the market can go and everything else doesn't really support it. That's definitely possible. But I think it's more likely that the macro environment will support it and everything will push towards that, supporting supporting the market going higher, like lower rates, booming economy, stock market rising, and a general feeling of positivity.
Interesting. Kyle says the reason I said early 2026 for blow off top is that because if it were later, then that means the 4-year cycle will not be the norm anymore.
Oh, okay. That's interesting, actually, because I don't really look at the 4-year cycle, but I do hear you guys talking a lot about it, and you could be right. Yeah, you could be right. I just don't look at it that closely. I look at the broader markets and when I feel they might top out, as opposed, and then maybe crypto will be affected that way as opposed to the other way around. But look, there's also scope for cycles to extend, aren't there? So it could extend beyond, and maybe that will be an indication that it's the top. You know, we get this extended 4-year cycle, maybe goes to 4.5 years, and in that final half a year, that's when everything's blowing higher, and everyone says, yeah, actually the 4-year cycle's broken, and then that's when we get the correction. I guess we'll have to wait and see. That's the fun about markets, isn't it? There's always something going on, and there's always something to look out for, and there's always something to learn too, which is what makes it infinitely interesting. And you know, people like me with grey hair will say that, you know, you can never really know enough about it, and you don't ever think you do know enough. But yeah, that's an interesting thought. That's a very interesting thought.
We'll probably hear some of that if, you know, say it does run later this year or even next year, and it goes crazy. As it's going crazy, you'll hear people say, "Oh, it's never going to go down from here, and this is the future." And we heard that in 2017, 2021. This time it's different, and it's just going to keep going. And it wasn't different. There was then a correction downwards and a bear market that followed. So I'm sure we'll hear that this time too as it goes crazy. I do think that there's a convergence of a few things. It isn't just the Bitcoin halving that causes crypto to go crazy. It's also happens to coincide with when the election year is in the US, which also happens to coincide with generally when interest rates come down. But last year, interest rates didn't come down that much. This year, they haven't come down very much either. And so that liquidity injection that usually comes with interest rates coming down hasn't happened yet. And what's interesting is Raoul Pal talks about this huge amount of debt that has to be refinanced, corporate debt and other debt that gets refinanced every year, coinciding with the liquidity cycle. And interest rates haven't come down enough, that there's a lot of pressure to bring those interest rates down so all this long-term debt can get refinanced, that essentially it's 5-year debt, and it gets refinanced. And so we'll see if prices do come down more, so these trillions of dollars in debt can get refinanced again. We'll see.
If America wants it, it's going to happen. Basically, that's what you're bet on. Pretty much. I mean, at this point as well. Yeah.
Well, Paul, thank you for joining us and for your insights. We love it.
Well, thank you, guys. Thank you. It's always a pleasure to come on the show. And yeah, look forward to talking to you next week. Thanks for the picks. Thanks for the questions. And yeah, see you next week.
All right. We'll see you then.
Thanks, guys.
All right. For you, Cool Mo, I can look at DEFINITY. Now, keep in mind, I hold a lot of DEFINITY. I very much believe in their project. And they've been trading really interesting. So they bottomed out. Let me give you a chart that you can see. Here during the bear market, a combination of a few things. Bear market combined with some vesting challenges and some other restructuring that DEFINITY did brought its price down to a really, really cheap price. I was aware of DEFINITY because Paul had started joining us on the show way back here in 2021, but I hadn't been following their token, didn't know really what their token did, and really didn't understand at a deeper level what DEFINITY did. I had a really good chat with Manu about right here, and when the chart was about right here, I was like, wow, what they're doing is amazing, and their token, their market cap is so low for what they're doing, and boy, it's not even giving us, it is giving us a fully diluted value, but it's not giving us other information. So then the token price took off all the way up to like 7 cents, and it's corrected back down to 2.1 cents. We can't see, at least on CoinMarketCap, what the market cap is, but the fully diluted market cap is, where'd that number go? 3.65 million, which I think is massively underpriced. One of DEFINITY's competitors just got bought out by XRP for over $1 billion. And in my opinion, DEFINITY can do more than what that competitor can do. That competitor doesn't have the same kind of access to foreign exchange markets and stuff that DEFINITY does. So I think DEFINITY is just below the radar of most of the crypto world. so far. They do have a cash producing income stream, which is what's really appealing to me. So when I'm investing in businesses, like regular businesses, cash flows are really, really important to know about the longevity of the business. In the crypto space, there's so few businesses that actually have cash flows that it's almost not a thing. Like a lot of crypto investors, they don't even know to look for that. When a company does have that, it does give them sustainability that other crypto businesses just don't have. Now, as a token use case, as we get a little bit further along, I think the token use case is going to come more and more into use, which is their customers, which they continue to acquire new customers and clients, can get a discount if they hold a certain amount of DEFX's token. And their first corporate customer is going to be buying some to get that discount. A year ago, as Manu said, there's a lot of resistance to their corporate customers holding DEFX, and they didn't want to hold an altcoin at all. But now a lot of that resistance has evaporated, so that use case will probably come into fruition. So I like it as a buy at 2 cents. I think it's a great deal. That gives us a fully diluted value of 3.65. Let's see if CoinGecko can give us better information on what the market cap is. So they're saying the market cap is 3.3 million with a fully diluted value of 3.7. Awesome. Keep in mind the equity behind the competitor to DEFX just sold to XRP for over $1 billion, and yet the token valuation on DEFX that has positive cash flows also has a use case that makes sense. The market cap on their token is 3.3 million. I think it's massively undervalued and massively unnoticed so far. But I think when DeFi really runs, I think DEFX gets some attention. That's market cap can do great from here. So that's why I buy it. That's why I hold it, and why I think it can do really well from here. Blonde Bros asked a very good question. At what level of Bitcoin dominance will altcoins usually kick off? And what level of Bitcoin dominance is a good idea to exit alt positions? I used to follow that closer, and I'll pull it up. Give me just a second. So here we have with Bitcoin dominance, and it's definitely getting to some high levels. And at some point, it's going to slide. So this is back in 2020 when Bitcoin had been climbing, and this is really when altcoins really took off. And though Bitcoin continued to climb through here, altcoin, it was losing dominance versus altcoins, which really started running. And so Bitcoin peaked in March, and then later again in July or October. So it peaked again here, but altcoins had run so high that Bitcoin dominance fell off. So Bitcoin's dominance is getting pretty high again, and a lot of that momentum hasn't moved into altcoins. I don't think it goes all the way up to the 73% level. I think it gets a little bit higher than this, maybe, or maybe this is at the top. At some point, this slips into altcoins, a lot of this equity, especially as more and more of these altcoins have stronger use cases, and what they've been developed to achieve, like XRP, is getting realized. So I don't know. I don't know that it gets too much higher than this. It's already at 64%. And then where does it tend to bottom? Notice it changed between the two different blow-off tops. So it's hard to tell where it switches. So it went all the way down here to a 35% dominance. In the last bull market / bear market, it never went quite as low, bottoming at just under 40%. So I think it starts to run before it gets to the 74% level, and it might not be too far away from where it's at. So I think Bitcoin takes off, and then I think the altcoins really run. At which point does it signal the bottom? I don't know. I don't know on that. Great question, though. I wish I knew the answer to that one, because it'd give me a better indication of where the top is at. And knowing where the top is at is hard. I'd really love it if one of the companies that has a use case that I'd love, like Bumper, would really come to fruition and start to allow us to bumper different altcoins, because I'd love to, instead of selling them to take profits, just bumper the position. And that way I can explore further upside without having to do my typical strategy of take some off the sides, put it to the sidelines, then take some more off as things go crazy. Great, everyone. Thanks for joining us. Enjoy the wrap as a closeout. I do think that we're in for a massive run, and I think things are setting up very well for that. It's been frustrating because it takes longer. This is why I tell you, don't in the short term try to expect certain timelines, certain deadlines, because the market can continue to act irrational far longer than you can stay solvent when you borrow money in order to buy, or when you have some deadline that needs to happen by. Patience is what allows you to just wait till this happens, because it is going to happen. It's just not happening yet. And it might happen soon, but how soon is soon? It could be 2 months. It could be 8 months. I don't know. We'll see y'all soon.
Came into the space chasing all of the gains, chasing the pumps and all of the hype trains. But like in life, shit bad before you could. Was told to buy when it was pouring like a rainmaker should. I buy when it's down, don't chase the boats that I miss. Cause I always make the time in mind. I stick the one out cause I'm patient like that, and I'll wait for the right time. I sell when it's high, I buy when it's low. They call me rich, they call me smart. I'm just a rainmaker running the show. Calculated investments, I don't leave with my heart. The principles are simple, they're leaving a mark. Buy when it's boring, just gotta be smart. I sell when it's hype, like all the channels they pump it. That's when I was selling, go parabolic and dump it. They call me rich, they call me smart. I'm a rainmaker, making my own start. I'm with the future, learning the past. Makes the time fly by, years going so fast. The game plan is mine, I'll own it now. When I reach the top, haters asking me how. Cause I'm a rainmaker, investments I love, and I follow what I learn, not relying on luck. Time is never better, the time like the present. This next 5 years is a gift and it's feeling like heaven. I'm committed to learn, studying to know that nothing comes easy, but with knowledge the game show. Sticking out this wrong, cause soon will come a bear market. Learning and growing, and when it's slow will be the target. They say it's come out, Bitcoin is dead. The massive decreases can get to your head. Sticking around, the time is better. Strong like that, I'll let the others be fretters. 2 years time, the ball will bring back the gains. That makes it worth the effort, cause here comes the rain. So let's go rainmakers, let's make it all happen. Let go of the hate, let the haters be crapping. I'm here for 5 years, let's do this together. The time is right, the time could be better. They call me rich, they call me smart. I'm a rainmaker, making my own start. I'm with the future, learning the past. Makes the time fly by, years going so fast. The game plan is mine, I'll own it now. When I reach the top, haters asking me how. Cause I'm a rainmaker, investments I love, and I follow what I learn, not relying on luck. Haters be hating, the time to slow down. Addressing what they say when I'm wearing my crown. They're chasing green candles like someone who was new. I got a vision that was bigger, helping me to push through. I'm still human and sometimes it is rough, and that's what makes me special, simply I stay tough. Cause I'm a rainmaker, investments I love, and I follow what I learn, not relying on luck.